Welcome back to Fast Money. Shares of CSX moving lower after hours. The railroad company reporting better than expected quarterly earnings and revenue and authorizing a $5 billion share buyback. And with the help of a few strong airlines reports, the Dow Transport's rallying 5% this month, tracking for its best January in 6 years, with stocks like United, Avis, FedEx hauling higher. So will transports keep on trucking, although CSX is a little bit of a wrinkle given its move in the after-hours session.
Huge wrinkle. I mean, listen, to talk about the transports, it's a pretty kind of wide swath. If you think about it, we got bad news out of the cruise lines, out of some of the airlines initially, obviously FedEx in late December. And when you think about CSX, this is a better read on what's moving around our country, how the U.S. economy is doing. I don't think that the guidance that they gave was pretty disappointing.
Although there's some that say that railroads aren't indicative of the economy anymore, but I think it is, to your point, a better gauge on what we think the economy is supposed to do. And if these guys are really ripping higher, then that's a great sign for the economy.
So we downgraded railroads on October 30th. This is a very capital-intensive industry. And what we see them doing is they are reducing CapEx and they're taking on a lot of debt to buy back shares, which is exactly what CSX is doing. And what that does is it just puts them in a tough spot in the event that the economy does take a downturn.
What's a better read of the economy in your view? Trains or planes?
Wow.
Well,
Trains or planes? I'll give you an answer. I'll give you an answer. I'll play the game with you.
UAL did well.
If our economy is 73% driven by the consumer, I think that's about right, then I would say planes is a better read-through for the economy. I think I'm sort of taking Steve's point on this one. So I'd say planes. In terms of CSX, though, I mean, the stock's been in a pretty significant downtrend for the last 9 months. The bounce you've seen is a bounce we've seen before at 15 times forward earnings. I don't think it's all that cheap. I think it rolls over here.
Our next guest says there is trouble brewing in the transports, but one name is still looking like a buy. JC O'Hara of MKM Partners is over at the Plasma to break it down. Hey, JC.
Hey, Melissa, how are you?
Good. What are you looking at?
So transports, what does that mean for the overall market? Now, you like to see transports move higher in a bull market, and you actually like to see the relative line of transports to the Dow Jones Industrial confirm that bullish price action. Unfortunately, we have not seen that. If you go back to the beginning of 2018, January, we had the nice rally in the market. However, if you look at the relative line, we actually made a lower high. So that itself is a bearish divergence with price. If we come back here to the August, September highs, what happened? The relative line, again, failed to make a new high. So consequently, we rolled over. Now, what was interesting, in November, we actually had a little counter trend move in the market. We actually saw some signs of improvement with the relative line. However, this January rally is showing zero signs of relative improvement. It actually looks like we're pretty darn close to making a 52-week relative low in the entire transport sector. So to us, that is a giant concern. Now, if we look at the next chart, UPS, this was one of those former bellwethers. You want to see UPS doing well. And you know what? Let's go back to January. We look at January, UPS was making a high on an absolute basis, and that overall was positive. But if you look at the relative performance versus the S&P, failed to make a new high. So again, you didn't see that bullish confirmation. When the entire market rolled over and started picking up over the month March, April, May, FedEx on an absolute basis started to try to participate, but on a relative basis, couldn't get out of the mud. We saw it roll over before the overall market, so that kind of gave you a gauge. When the market's down 20% from its highs, we want to be looking at stocks that are rebounding the strongest off the lows. The average stock since the December 24th low is up nearly 13%. UPS up 8%. So yes, absolute, it's doing okay, but that's 400, 500 basis points of underperformance. So UPS is another stock that we want to stay away from. And Melissa, to answer your question, what is better, rails or planes, or trains or planes? I brought one bullish chart here, and that is of Spirit Airlines. I love this longer-term base that it's tracing out here. We can make the case that this chart is showing you a double bottom here. Now, how many stocks actually gapped up 15% during that entire October through December decline? Well, this is one of them right here. Now, there's a little resistance here at 65. If we get above 65, I think this has another $10 upside. So like this chart, keep an eye on it. 65 is a key level.
JC, did you say the average stock is up 13% from the December lows?
From the December 24th lows, the average stock is up 13%. Yes.
That's amazing that the average stock has made that move. JC, thanks. JC O'Hara of MKM Partners. Anybody like Save?
It's a Steve Grasso name. Go to the hook over there.
I mean, that is a name that
the hook.
I thought you said the Hulk.
No, well, that too.
New to me.
That is a name that outperforms, and it's kind of a sneaky airlines where the chart, everyone kind of forgets about this one. They trade the marquee players. This is one that's been flying under radar, has really no effect with the government shutdown for this one. People sort of glide into this one. If you want profitability, where if you think the airline's going to do well, this has a higher beta, and you get a little more leverage with this one versus the other names.
So like any of the transport names.
I'm terrified of the airlines in general. I mean, it's just a really tough business.
Getting on one, or
no, actually owning them. So tough business to be in. You know, fuel costs have come down. And you would think that profits could increase, but that's not the way it works. Instead, they have to immediately pass all those savings on to the customer because it's such a highly competitive business. So, no, not a big fan of the transportation.
I think the lack of balance in FedEx and UPS is really troubling. And I think that we were talking about what does the bank rally off of the December lows mean for the broader markets. And I think if you look at some of these names in the transports and you look at the inability for a FedEx and a UPS to rally, I think that weakness is much more significant than the bounce that we've seen in the banks if you're trying to extrapolate things to the broader market.
I still cannot wrap my head around the average stock moving 13% from the December
you
lows.
asked that twice. You
well,
were
because
incredulous.
average,
Still can't believe
not,
it, she said.
You know.
Yeah, thank you.
Okay.
You're helping me now?
Median move.
But doesn't it tell you something that it was just so overdone? People were so shocked with it that there's indiscriminate buying of all sectors, all space, all names.
Yeah.
Well, to Dan's point, Federal Express, for example, bottomed at 150. It's 171 now, which is percentage-wise a decent bounce. But FedEx topped out at 275 at the beginning of last year. This will be the fourth time you've had a huge move. The downside, bounce, not a new high. Downside, bounce, not a new high. So the trend is clearly still lower. You have to wonder when FedEx starts to roll over again.